This week's guest is Jack Hubbard, chairman of St. Meyer and Hubbard, an amazing banker with some amazing experience. He talks about AI in banking. He talks about how to stay safe when you're using AI. And he talks about the importance of developing your career in banking through doing different jobs at different times. Enjoy the show. Hi, everyone. It's Alec Crawford, your host for the AI Risk Reward podcast. We have a very special guest today. My friend Jack Hubbard is here today. He is chairman of St. Meyer and Hubbard. He's been a banker and a consultant, a revered consultant and guide for bankers for a super long time. So amazing to have you on the show, Jack. Welcome.
Alec, thanks so much. It's great to be with you, and congratulations for what you and Joe and your team are doing for community banking, especially. They really need the help in this AI mess that we're in.
Yeah, well, we're definitely trying to help, Jack. So what I really love doing is kind of rewinding time and going back in time and just tell the audience a little bit about your story.
Yeah, 53 years in this business. I rewatched the tape that you did with Eric Cook, my very good friend, and he went into banking. His father was there, and I think it was a good thing for him to do. I never wanted to be a banker. Ever since I was 6, I wanted to be the play-by-play voice of the Chicago Cubs, and spent my high school years doing radio play-by-play of high school games, and went into college and did the same thing. And it's a fascinating story. It's serendipity. I think we need to look at serendipity a little harder these days. It was 1972, May 31st. I was general manager of the campus radio station at Northern Illinois University. And I needed a job because I was getting $40 a month. And that, even back then, wasn't a great salary. So one of my fraternity brothers said, hey, the county nursing home is hiring all-night orderlies. And I said, well, what does the all-night orderly do? And he said, well, not much. And I said, I'm really good at not much. So I went over and got a job. And I was supposed to go to the second floor. And when I got there at 11 o'clock at night, my boss said, well, the third floor orderly is sick. We need your help up there. And May 31st, 1972, met this young girl who had graduated early from DeKalb High School. She wanted to be a licensed practical nurse. And so she was an all-night aide. So what do you do when you're all night? You talk to each other. You got to know each other. And our first date was July 4th of 1972. We were engaged July 12th of 1972. That's 8 days. Those of you keeping score at home. And we were married September 23rd of 1972. And she's been a phenomenal partner ever since. So we're on our honeymoon. We come back from our honeymoon. Of course, no cell phones, no voicemail, no nothing. And I called my best man, Ken, and I said, hey, Ken, how's it going? He said, bad news, mom died. And I said, your mom died? And he said, no, our fraternity house mother died. And he said, we've nominated you and Kathy to be house parents. So I was 22 and she was 18. And we became house parents at a house that was, if you think about Animal House, it was about 100 times worse than that. So here we are. I'm about to graduate from college, and we were making a deposit to the Union Bank of Elgin, Illinois, where I live in my hometown. And we were sending out tapes and resumes to radio stations, and the envelopes got switched. She sent the deposit to the radio station, and the resume went to the bank. And the bank called and said, we are starting a management training program, and we'd love to have you be our first management trainee. And I said, who the hell are you? What do you want? And they said, well, we got your resume here, and it's fabulous. And they said, we don't understand what the tape is all about, but I think your resume is fabulous. So I started 2 weeks later, right after graduating from college, at Union Bank in Elgin. Spent 13 years in banking, and kept getting fired because banks were getting acquired, and I was in marketing and I was expensive. And so the last day I got fired was October 1st of 1986. And there was a guy there who owned a sales training company. And after the speech that I gave, he came up to me and said, you could do sales training. And I said, what's sales training? And he showed me. And since January of 87, I've been in sales training. And that was at a company called FTR that's no longer in existence. But they sent me down to Orlando, Florida to do a program. And I met a guy there who had just lost his job because of a merger. Bob St. Meyer is his name. And we met, and my boss said, you got to interview this guy. He says he's a pretty good sales trainer. So I met Bob, and we talked for hours and hours and hours. And he's got 2 kids. He's got a great wife. And we think exactly alike in most things. So he got hired, and we spent the next several years kind of thinking about, should we start our own company? Bought a house across the street from me. And we started our company in 2000, St. Meyer and Hubbard. And last couple of things I'll mention, I really do believe that life is serendipitous. So when you start a company, as you know, if somebody calls and said, we'd like to have you send us an invoice and have you do something, you say, yeah, I'll do that. And so we did. And we got a call from an organization in New York who said, hey, we'd like to have you come and speak on September 11th at the World Trade Center, and we'd love to have you do a program for us. I said, great. And that was 2001, 3 weeks before they called and they said, we can't do the program. They need the conference room. We need to postpone it. And I said, okay, that's completely fine. And I watched television in horror like everybody else did. But we did a good job at our company. And the last thing I'll mention is we met a guy that we were doing coaching at Harris Bank in Chicago. It's now BMO Harris. And his name is Rich Davis. And I coached Rich, and Rich became the president and chairman of St. Charles Bank and Trust, which is a Wintrust bank. And 14 years ago, he called me and he said, hey, I want you on my board of directors. You bring a lot of value to the table. And so I became an accidental board member. So I've gone from accidental husband, accidental banker, accidental partner, accidental board member. I think life is a complete accident, Alec. And I'm thrilled to be here after 53 years in this.
That's amazing. Yeah, I'm also an accidental board member for Dynex Capital and chair their risk committee, which is fun, which is kind of
a lot of fun.
Love thinking about risk and love engaging with public company boards and management. Yeah. So, look, you've been training people forever. But did you have any particular mentors? Obviously, you and Bob, I'm sure, learned a lot from each other. But any particular mentors or anyone you want to mention there?
Yeah, 2. I was in high school. I was not a good athlete in high school. And give you an idea how good of an athlete was, I was the high school basketball organist. So that's how good of an athlete I was. But I've always loved baseball. And so our very first baseball team happened when I was a junior in high school. They launched the baseball team. And I thought, I love the game. I want to play. So I tried out, and I was doing really, really poorly. And our coach is named Ron Kalina. And one day I was walking through the hallway they were starting to make cuts. And I said to my buddy, Mark, I said, I don't think I'm going to make this team. I'm going to give up. And back in the day, somebody could grab you around the neck. And I felt this grab around my neck, and it was Ron Kalina. And he said, Mr. Hubbard, don't give up on yourself. I'm not going to give up on you. And he made me work hard, worked with me in the morning, worked with me before practice. And I made the team. I was on the team for 2 years. I still hold the record for the best defensive first baseman in the history of the school. And Ron is a great friend, and Ron changed my life. Another guy that changed my life is a guy named Kent Stickler. I was in the industry for a long, long time. And Kent was an instructor at Illinois Banker School. And I was a young banker, and I wasn't doing terribly well, wasn't happy in banking. And I sat down with Kent one day for breakfast, and he said, after talking to you for a little while, you're a consultant. He said, get some experience. He says, you're not a banker. You're a consultant. I see it in you. And I still talk to Kent every Thanksgiving Day and thank him for all the things that he has done for me. So those are two people that have really made a difference in my life, certainly, in addition to family, obviously, and the other things.
Wow, that's amazing. Look, the show focuses obviously on AI and the risks of AI and the benefits of using AI, and with a real focus on kind of financial services, community banks, which is and if anybody knows a lot about community banks and bankers, it would be you. So just curious, like, what do you see out there in terms of community banks and AI? I mean, at the start of the show, you're like, "Oh, this is a mess," right? Like, but and look, it changes all the time. But today, like, what are you seeing? And then I'll ask some follow-up questions, obviously.
Well, a little while ago, back in late February, Cornerstone Advisors came out with a very interesting study. And it was part of a webinar that they did. Cornerstone is a great company. And during the webinar that I watched in late February, they asked about community banking and how many community banks had really started to get deep into AI. And 58% said they were still thinking about it. And I think that's obviously the wrong thing to do. Put your head in the sand and think this isn't going to happen is wrong. And here's the other thing. I focus on sales. And so we're seeing salespeople do a number of really creative things with AI. And if the bank thinks they're not using AI, they're all wet. And so what we have to realize as bankers is we hire adults, we trust them, we vetted them, they've signed a pledge that they're going to do the right thing in the fiduciary way. And so what we have to do is think about how can we, in the best way, get AI to the bankers to use in sales. I'll give you a couple of examples. I am on LinkedIn often. And, here I am, 76 years old, and I use LinkedIn quite a lot. And I use a lot of technology, ChatGPT and Complexity and certainly others. And one of the things that when I do my speeches, I show to bankers, I'll say, okay, let's plug in Alec Crawford's LinkedIn profile, and let's ask it a couple of questions about his profile and about some of the questions that I should ask on his discovery call. So I just copy the link to your profile, put it in ChatGPT, and they're absolutely amazed. There's so much that can be gained from that. Here's the other thing that's going on. We did a study and we found that it takes about an hour and 6 minutes for a middle market banker to do research and plan a call strategically. And even then, 83% of people who are called on by banks feel that they're not well prepared for the call. They've prepared, but they haven't prepared strategically. So over the past 2 years, St. Meyer and Hubbard, in conjunction with a company called Performance Insights, a gentleman named Ron Buck, who's brilliant, have put together a program called AI Navigator. What AI Navigator does is to go out and searches millions of websites, companies like RelPro, Vertical IQ, and others, and in 3 minutes or less, helps a banker create a call plan with strategies, insights, and call questions that they would have never done in an hour and 6 minutes. This is changing the life of community bankers. So back to your original question, we have got to realize as community bank CEOs that this, as you know, and you see it every day, this is not going away. So what we have to do is to figure out how to make this palatable, legal, risk-averse, and focused on the customer around AI, because the train has left the station. And I remember when I did a sales training program a long time ago in St. Louis, the president stood up in front of the group and said, Jack's here, and the train has left the station. You have a couple of options. You can jump on the train now because it's going pretty slow. You can wait for the train to speed up a little bit, and you can jump on it, and you'll still probably make the train. But don't stand in front of the train because the train will run you down. And that's where we are with AI, Alec. Don't stand in front of the train because it's here and it's here to stay.
Oh, I love that. Like, because I'm thinking, don't miss the train. You're going to miss the train, but it's really the train's going to run you over, right? Like that's amazing. That's amazing. Yeah, and I think less train, more aircraft, right? But you got to think about all the risk management about that. Like, do we have enough fuel? Like, are the right people on board to fly the plane or drive the train? Things like that, and that's partly what's going on with AI, right? Is that the reason that it's not showing up in community banks is that, the CEO is getting demands from stakeholders. They go to the chief risk officer or the chief technology officer and the cybersecurity guy, and they're just have the pants scared off them. They're like, oh my God, like AI, are you kidding? Like, how are we going to do that safely, right? And I think that's in the past now. We know how to do that to make AI safe for community banks. And if you just tell people, yeah, don't use it, they're just using it on their phones or their laptops or at home, or they're just emailing themselves back and forth. So it's going to happen. And eventually the disaster happens, like happened in Texas last year, where a community banker uploaded a bunch of stuff to Perplexity about their customers, now realizing, oh, Perplexity's license agreement says they own all my data, and ended up getting in huge trouble with the regulator. So got to be super careful about that. So the alternative to people doing bad things with AI outside your bank is giving them awesome AI inside your bank, and then they won't want to do that.
That's right. And it's interesting. Wintrust, bank that I'm on the board of, one of the affiliate banks, we have 8,000 employees. And so we've probably got 250 people in risk and compliance and IT that are working on this every day. But community banks don't. And they need outside help. They need people that they can go to, that they can trust, like your company, like people like Eric Cook, who I don't know if the guy ever sleeps, because every single new bell and whistle that comes out, Eric seems to know about it. And the other guy that I always recommend community bankers look to for guidance is Chris Nickel. I don't know that there's a smarter man in banking today than Chris. He is all over. But what's really good about it is it's not just about AI. It's connecting AI to different things like agentic AI and sales and customer service and all those kinds of things. That's, I think, what you do better than anybody, is that you make connections. It's about, yeah, sure, making sure that AI is safe, but you're also helping people make making connections to all those things that bankers do that AI can make much more productive.
Yeah, that makes sense. Yeah, just connected to data and use cases, all that kind of stuff is important, because the biggest failure in AI, once it's rolled out at a bank, is typically a failure of imagination, right? If you just give someone ChatGPT and say, good luck, they go, what am I supposed to do? It's about training and use cases and focus groups and change management, right? My running joke to bank audiences is, hey, if you were bringing a new CRM system into your bank, would you raise your hand if you would do training? Everybody raises their hand. And I said, okay, raise your hand if you have had any AI training. And 3 people raise their hand. I'm like, are you kidding? Like, really? Like, it just doesn't make sense, right? And that's obviously what one of the big things that Eric Cook does at WSI is AI training, from basic stuff to much more complex stuff. I think let's go back to the leadership question. We were talking about Chris Nickel, so I'm still trying to figure out if we're related or not, because that's my grandmother's maiden name. I'll figure it out eventually. And just think about leadership in AI at community banking. Like, how do you lead from the front as a CEO with AI at a community bank?
Well, excuse me, let's pause that for a second. Well, I think the most important thing is the thing that CEOs tend not to want to do, and that's get to know AI themselves. You talked about CRM. Ron Buck, who I mentioned before, has done study after study after study, and it's up to about 80% of CRMs go to waste. The investment just goes right down the drain. And what happens, it becomes a high-priced Pac-Man game. And it becomes a big brother, big sister, let's look over your shoulder, tick mark kind of thing. And one of the reasons that CRM fails is because CEOs, sales leaders, and others don't know how to use the system. There's an excellent banker over at PPAC Gladstone Bank. His name is Steve Smith. And Steve is one of the best sales managers I've ever met. I met him when he was over at Capital One and Fleet. And what Steve would do with his one-on-ones, he would have the banker go to their CRM system and log in. And then he would change places with the banker. And he would go in and look at their calls for the week. And he would say, well, tell me about this call that's on the screen now. The banker, he did that for a reason. The banker knew that they couldn't BS Steve. He knew that system better than they did. So biggest problem in CRM is many versions of the truth, because a lot of CRM people are still using Excel spreadsheets for their pipeline. I don't understand. Now go to AI. It's the same thing. CEOs are afraid of it. They say, I'm not tech savvy. I don't understand. If they don't understand, if their senior leaders don't understand, they don't use it. This is never going to happen at their community bank. I'm all big on groundswell, bottoms up. Let the bankers use it and push it up. Problem with that is that the CEO controls the wallet. And if the CEO isn't familiar with, doesn't understand AI, then nobody's ever going to get the benefit out of it, because they're not going to buy the bells and whistles that really make it work. You look at AOBA, acquire or be acquired. Thousands and thousands of CEOs at that conference every single year. And I'll bet you have a lot of people at all your conferences that you speak at. Here's the key. When the rubber meets the road and the CEO signs the check, the next thing they ought to be doing is going to a training class and understand very clearly how to make them more productive with AI. Because when they're more productive, it trickles down to.
Yeah, that's such a great point. We're actually, I'm glad you said that. We actually are working with one of the CEOs of one of our community banks to get the CEO some very specific things for his bank, including, connecting into very specific data that you can't just go to ChatGPT and say, hey, get me this data, right? And that's really the key, is getting things that are unique and connected. And now a word from our sponsor. Artificial Intelligence Risk Inc. accelerates adoption of GenAI safely. They provide the governance, risk, compliance, and cybersecurity platform that financial, healthcare, and other regulated organizations need before they can use GenAI safely and in compliance with regulatory requirements. Their software has won #1 awards for cybersecurity and compliance from Waters Technology. Find them at aicrisk.com. Yeah, and look, there's been a lot of stuff going on recently in terms of, ethical considerations around AI. I remember last month hit the headlines, or about a month ago, where Jack Dorsey at Block literally laid off half of his staff, and they seem to be moving away from blockchain and towards AI, which, a lot of companies are doing. And I think as banks onboard AI, that's going to be one of the fears of people, working at community banks. Oh my God, my job's going to be taken by AI. And from what I've seen, in general, that's not the case. Like, they're bringing on AI to kind of make your job easier. They're trying to get the AI to do the boring, repetitive stuff, like, hey, does the driver's license match the loan application? And the employees will have the high value stuff, like, should I actually make this loan or not, right? So I think that's really important to communicate. Like, look, you're a communication expert. Like, I'd love to hear your thoughts in terms of how should leadership at a bank, as they're onboarding AI, communicate to internal as well as external stakeholders about AI?
Yeah, I remember when LinkedIn first came out, and I jumped on the bandwagon. I was there right when it started. I said, this is going to be a phenomenal. But for years and years, even to the present time, there are some CEOs who refuse to let their bankers use LinkedIn at the office. Horrible mistake. One hand tied behind their back. Um, so you mentioned ethics. In February, I attended a program called Sales 3.0. It's done by the Selling Power people, which is fabulous. One of the best attended virtual programs was AI ethics. And there were 4 amazing people on it. And one of the things that came out of that, and this isn't a banking event, it's just an industry, all industry. One of the things that came out of that for me, and also in talking to Eric Cook, is that you need to have a policy. What is your policy? And then you got to teach people what the policy is. It goes back to training. Um, if I don't know what I can and cannot do in using AI, I might think, well, I'll apologize later. You can't do that anymore. There's going to be lawsuits from customers if you let their information out, like you mentioned.
Oh, yeah. Yeah.
So I think, number one, there needs to be some type of a group of people at the bank, or maybe one person, who starts to understand AI ethics and starts to understand how to write policy. And then we have to realize that this is the only industry I've ever been in. And it is a complex industry to deal with. You've got risk and compliance and lending and deposit ops and now digital banking and all these kinds of things. So it's not just one policy. It needs to be a policy for this and this and this. And we need to have a policy for sales, because people in sales are going to use this. They're going to write posts for LinkedIn using AI. Bad idea. There needs to be a human in the loop, and there needs to be some editing around that. But there are people who are just going to hear, oh, let's use AI for a post, and they'll do it, and they'll make a bad mistake because, as you know, AI can hallucinate. So we need to have all these kinds of policies, and then we need to have training. But here's the other key. There is a dearth of sales coaching going on in banking. Managers are doing a lot of deal coaching, but there is very little sales behavioral coaching going on. Intentional sales behavioral coaching. What needs to start to be added to that coaching: team meetings, role plays, activities, discussions, is how are we using AI in sales as it relates to the policy that you all have agreed to do. So ethics, policies, leadership, it goes back to anything in banking. If you're going to be successful, it all emanates from the leaders.
Yeah, that makes a lot of sense to me. Absolutely. Lead from the front. Now we're going to switch to our advice section. We've talked a lot about advice for CEOs and bankers already. Look, there are college students out there that are just trying to figure out, what their next career is. And a lot of people are like, I want to be a software developer. Like, whoa, I'm not sure that job's available anymore. But if you were giving advice to a college student who wanted to go into banking or community banking, like, what's your advice there? What should they study? Who should they talk to? What group should they engage with? Again, we're kind of accidentally where we are. What if someone wants to intentionally get into community banking?
Yeah. If they want to intentionally get into community banking, my first pass for them would be go to a big bank, because there are a lot of community banks. I went through credit college when I was a banker and even as a community banker, but a lot of community banks don't have credit college anymore. Now you can go over to banking schools, and I think there's a lot of great banking schools, and I'm happy to talk about them. But I think if you're you want to be a community bank, you want to serve your community. It's a noble industry. It's a fun industry to be in these days, especially if you're in things like sales or marketing or those kinds of things. get your start at a larger organization, work there for a couple of years, find a mentor, and then go over with some knowledge around community banking. So that's number one. Number two, when you get into community banking, banking schools are the key. Stonier School of Banking from the ABA, top notch you're involved with the Wharton School. It's at Philly. It's truly outstanding. And Graduate School of Banking in Madison, Wisconsin, GSB is up at the University of Wisconsin. Pacific Coast School of Banking out on the West Coast, LSU School of Banking down south. And there are a lot of state banking schools too. I've taught at 13 banking schools, and I still teach at the Perry School at Michigan Bankers School. You're a community banker and you choose to go into the community bank, go to a banking school, number one. Number two, go to a bank that gives you opportunities at a lot of different kinds of disciplines. Don't go in thinking I'm going to be a lender. The Massachusetts Bankers has done a great job with this. They've put through 86 people through a program, and it started with lending. And from what I understand, I believe it's 13 people who, after they've gone through that program, have said, lending really isn't for me, but banking is. I'd like to try something else. So go to the bank. It gives you lots of opportunities. When I started out in banking, I was in repossessions and collections. And believe me, I learned a lot of unique words and phrases in multiple languages that I hadn't heard before as a young Catholic. Then I got into the branches, and then I got into lending, and I got into marketing. The only thing that I didn't really do was behind the scenes, the compliance and the risk or wealth management. But if you can get into a bank who is open to giving you some rotations, choose that bank. And it always doesn't have to be in the state that you're in. One of the nice things about banking is banks all over the country. And so you can choose where you want to go. So I would say, don't just decide I'll stay home and in Chicago because there are a lot of banks. Go explore, have some fun. If you don't have a lot of responsibilities, go to a city that you've always wanted to go to, because it's very likely, unless the city is 2,000 people with no stoplights in it, there are going to be several community banks that you go to. And don't forget credit unions, because credit unions have created a very unique opportunity in commercial banking and in retail to be able to teach you the industry. So learn. And the last thing I'll mention in this is read. There are people in America have read less in 2025 than in any year in our history, because we're always on our phones. We're always on the computer. Then when we're done with the computer, we're watching TV. I know people in my own family who don't even get a newspaper. And it's the thing that I love to read right away in the morning. So read books about your discipline. If you're interested in books on sales, find some good books there. AI, tons of great books that are out there on AI. Find something and be a lifetime learner. One of the things that, as a cancer survivor, I didn't think I was going to be here to do this podcast. As a cancer survivor and somebody that's kind of repurposed their life with a lot of new directions that I'm going in, one of the things I always do is I try to read a book. And if I read a book a week, I'm learning. I'm a lifetime learner. That knowledge, that wattage in your cottage makes a huge difference in your life.
Yeah, I'd echo that suggestion as well. And good news, Jack, like I'm writing a book about risk management of AI that's coming out later this year. So that could go into your book a week club.
I can't wait to get it. I'm looking forward to it.
Awesome. So now we get to our last section, which is called underrated or overrated. It's a lightning round where I mention an item and you tell me what you think and maybe a sentence why. We're going to kick it off, since you're in Chicago, with Chicago deep dish pizza, underrated or overrated?
Overrated. There are a lot of tourists who come in to Chicago and love to get deep dish pizza at any name that you would know. I can tell you from my experience, thin crust is better. Tavern style is outstanding. So I absolutely love thin crust, and let's pile everything in the book on top of that thin crust pizza.
Sounds great. Yeah. Like I just saw like the salad pizza, like maybe in the last, couple decades, which is basically, the crust and then you put a salad on top, which sounds pretty healthy. Um, Relationship banking in a digital age, underrated or overrated?
Yeah, I think it's overrated. By the way, back to pizza. Any meat is good. Salad is for a bowl. Meat, pizza. Um, you know, I think we rushed into digital banking, and I think we did it because we felt we needed to. It was a shiny object. I think we did it before we did enough training. The pandemic hit. Good thing we had a lot of digital banking because nobody was going anywhere. I'll tell you the reason I think it's overrated. Uh, I think what we're trying to do is to push customers into an avenue that many of them don't want. You look at Barlow Research Study.
Hmm.
Average business goes to the branch 18 times a month. They're going there
Wow.
for a reason. They want to interact with human beings. And so I think what we need to do is to find a balance. And that balance is sure, we do. My wife does all the banking, and she's involved very heavily in digital banking. But we still go to the branch. We still want to see human beings. If we have a problem or we have a question, I'm not going to call the call center. I'm not going to do a chat bot. And maybe that's old school. I'm going to go to the bank and I want to interact with a human. And by the way, I up until a couple of years ago, I traveled 40 weeks a year. I always refused to go to automated check-in. I always wanted to talk to a human being for two reasons. Number one, if I had a question or a problem, they could solve it. And number two, that was their job. They have a family. That machine doesn't give two stuff about you. They do their job, and that's all fine. So I think we need to do a better job of kind of interweaving relationship banking, which is a human to human thing, into digital banking, which is a tool
Yeah.
that people can use to be more effective.
Yeah. Makes sense. How about the Chicago Cubs chances this year, Jack? Underrated or overrated?
Well, the season started. One of the big keys is going to be pitching. I'm a huge baseball fan. I love baseball, and if the White Sox get into the World Series at some point before I die, great. I'll root for them. But I'm a huge Cub fan. I always have been since I was 7. I think they're going to have a tough time get into the World Series because of the team that just buys victories, the Los Angeles Dodgers. And I think, great, good for baseball players that are making a ton of money. But, when you buy 2 World Series in a row with the best players on earth, it's a little tough for others to kind of jump in the fray. So I would give them a 50-50 chance of getting into the World Series. I'd give them about a 90% chance to get in the playoffs and maybe about a 70% chance to go to the National League Championship Series.
Yeah. All right. Well, still solid chances. Um, so in a bank, what do you think about small group coaching? Underrated or overrated?
I think it's overrated because it's not done very well.
Hmm.
Concept is underrated. The execution is overrated. I think I one of the things that I do, in addition to some speaking that we can talk about at the end if you want, um, I do a lot of joint calls and I do a lot of observations and I watch managers do team meetings and I always refer to them as get to go or have to go. And I see a lot of people that come to meetings, their eyes are glazed over and they have to go. And so I think small group discussions are really important. But when a manager has a pipe dream instead of a pipe line meeting, and all they do is spew and pontificate and vomit numbers, people are not going to get anything. What I want my small groups to happen, I want them to walk out of that meeting with one more thing than when they walked in. And I want that thing to be behavioral and actionable today. And I don't see that in banking. Maybe it'll happen at some point, but not so much at this.
How about celebrating small wins? Underrated or overrated?
Oh, I think it's underrated, and I don't think we do it enough. And that is part of the problem in our industry. What we tend to celebrate is, and we measure number of calls made and the number of sales made. Banking, here it is: calls made, sales made. What everything in between is a coaching moment. So we need to do a better job of that. Underrated.
Yep. Bowling as a hobby, underrated or overrated?
Oh, it's overrated. I have never been able to roll a ball down the aisle. Ball is moving too much. I like the ball that stands still. I'm still trying to break 80, but I am looking forward, since we're here in the early spring, I'm looking forward to hitting the ball. Bowling is way overrated.
Reverse mentoring, junior to senior, underrated or overrated?
It's underrated, but I think it's very important. There are banks who have a culture like this. They make an actual purposeful approach to mentoring and reverse mentoring. And I've seen senior bankers come out of meetings with their mentee who has reverse mentored them with ideas that they could have never imagined. One of our challenges is that we have a big gap in our industry in terms of veterans versus rookies. And a lot of veterans, a lot of rookies. There's a big gap in the middle. If we can start bringing those middle people up, those 40-ish-year-old bankers that have a little bit of experience, 35-year-olds, and mentor those 55 and 60-year-olds, especially around things like technology and LinkedIn and AI, the older people, the more veteran people are going to benefit from that. So that's an important concept.
How about Gibson's for a steak and a cocktail, underrated or overrated?
It's overrated and overpriced. There are so many restaurants in the Chicago area that you could go and get a steak. My wife and I were talking about this the other day. The best steak, and I've eaten steak in 49 states. The best steak I've ever had is in Chicago at a restaurant called Chicago Cut. If you ever get a chance to go to Chicago Cut, number one, you're going to see every athlete, Oprah, the mayor. You're going to see everybody there. And you are going to get the most expensive and the best steak that you can cut with a fork that you've ever had in your life. Gibson's is overrated.
Well, put me down for Chicago Cut then, Jack. That sounds pretty good the next time I'm in Chicago. And how about handwritten thank you notes to clients, thanking them for referrals? Underrated or overrated?
Underrated. Very important. Great book. Elizabeth Cottrell wrote this tremendous book called Heart Spoken. And it's all about being able to write notes. We get so little mail anymore, Alec. And I'm even talking about if you and I are colleagues, I'm going to send you something in the mail so that it gets to your home or gets to your office so that you get a chance to read it. We need to do more of that. I have a habit, and it's called one a day. Every day, I handwrite a message. Thanks to Elizabeth, I handwrite a message and send it out in the mail to somebody who's done something for me, or somebody that needs a boost, or a golf buddy who got a hole in one, or whatever the case might be. And I've got a lot of cards that I got it when I went to the Masters, and I'll just write a little handwritten note. That makes people feel really.
Yeah, totally agree with that. Yeah, my kids still write handwritten thank you notes for their Christmas gifts. So very important skill. And last but not least, we typically do a movie. You mentioned a fraternity house before, so I'm going to throw out Animal House.
Oh,
Underrated or overrated?
oh, it's the best. It is the best. It's an underrated movie now because a lot of people, young people, haven't seen it. But Belushi and all those people that were in that movie were absolutely unbelievable. John Belushi, a lot of people don't know, grew up in Wheaton, Illinois, went to Wheaton Central High School. So did his brother Jimmy, and local people. If you get a chance, you really need a kind of a pick me up, and you want to watch something that's just mindless, go watch Animal House. Best movie I've ever seen from a comedic perspective.
Yeah, don't watch it with your little kids though. Yeah, I'm pretty sure it's rated R.
No, that's right. And followed very closely by Caddyshack. I dated Lacey Underall, Cindy Sikorsky, God rest her soul, worked for me on the radio. She was my newsreader, went on to Hollywood and became Lacey Underall in Caddyshack. She was a great actress. And that's the second best comedic movie I've ever seen.
Wow, that's awesome. Well, Jack, why don't you give the audience a little more information about what you do and a little more information about St. Meyer and Hubbard, and then we'll close it out.
Well, thanks, Alec. We started in 2000, and our goal was to help bankers have better sales conversations. And we've been doing it for 26 years. Got 37 playbooks, most of them on the bank to business side, everything from prospecting to making calls to negotiation skills, and a lot of training on LinkedIn. As I mentioned, AI Navigator is coming online this month. We're very excited about that. We've had some banks pilot it, and that's going to change the face of how pre-call planning is done. From a personal perspective, I've kind of changed my approach over the past couple of years. I'm doing a lot of 90-minute webinars where commercial banks will call and say, hey, I've got 50 people that kind of need a checkup from the neck up. Can you help them? And I'm happy to do that. I'm also doing a lot of keynotes and breakout sessions for bank sales rallies and things like that. The thing I'm most excited about is I'm writing a book that'll be out late in the fall or early 2027 called I Know Jack, 53 Years of Banking Excellence. And it takes people through, especially young bankers, what to do on sales calls, how to prospect. It's a how-to book, and I'm really excited about it. I wrote one other bestseller, a book called Conversations with Prospects, and I'm taking this mantle on, and I think it's important that we continue to help bankers as they go through their careers, especially community bankers. They need a lot of help.
Awesome. Well, thank you, Jack. This has been Jack Hubbard, chairman of St. Meyer and Hubbard. Jack, awesome having you on the show, and look forward to seeing you soon.
Thank you, Alec. Great to be with you.
You are listening to the AI Risk Reward Podcast with your host, Alec Crawford. You can find us anywhere you listen to podcasts, for example, Apple Podcasts. Production and sound engineering by Troutman Street Audio. You can find them on LinkedIn. Please like, subscribe, and comment.